Today, the stock market continued the rejection from critical resistance after we had FOMC. Does the Fed have a credibility problem? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today's SPY was down 0.69%, and we did see a full range move today from the support down here right around 408 all the way up to the resistance at 414, and we were slicing through 411 like it wasn't even there. Now in the intro, I joked about whether or not the Fed had a credibility problem because during FOMC today, Jerome Powell had just got done saying that the banks are sound and resilient, and then immediately after the market closed, we found out another regional bank is failing. So as you can tell, the chart is telling us to be cautious because we've already been at critical resistance and we had that bearish rejection candle. And ever since that rejection, that was a very early warning sign for us to get out and protect ourselves to the downside. And now we have 2 days of selling. So as I always tell you, the price action can do all of the talking and there's no reason to guess on what's going to happen. The news is always going to match what the chart was already telling us. So with these banks continuing to fail and the S&P 500 showing a sharp rejection from critical resistance, and we are now getting very close to some critical support, it should go without saying that you should continue to stay risk off until we see this condition going away. Now, as I always tell you, and I'll tell you time and time again, never get overly bearish at support. You need to see support failing, and right now the critical support is 404. If we break below 404, this is going to look like a double top rejection from 417, and that is easily going to take us down to fill all of these gaps to the downside, which could take us as low as 396 or lower. So do not take on too much risk. If we start breaking these support levels at 407 and 404, you instantly need to get risk off because this could turn into high volume impulsive selling. Now also do not write off the possibility that we bounce off of support because we still have gaps to fill to the upside at 415 and 421, even though the gap at 421 is very difficult to fill because we need to break through that critical resistance. So just to go through this, it is possible we go down towards 404 or 407, find support around that 50 EMA, still go up there to close the gap at 415, and then come crashing down and close the gap at 396. Remember, nothing is going to move in straight lines, and even if we are heading lower to fill that gap, there is no guarantee it's just going to be a straight line shot. And you can never rule out the possibility we go up there and fill the gap to the upside, even though it seems a lot less likely with the recent news of banks failing. Remember, banks failing is typically one of those black swan events, and it's not something that should be taken lightly. And just keep in mind, be very careful with your speculations because the stock market couldn't care less what you think. You need to listen to the chart. So right now the chart is still telling us we have a rejection from critical resistance and we're dealing with some critical support. And that tells us we should continue to remain risk off until we see some type of bullish price action. Bullish price action is going to require that break above 414 and then 417. So if you want to stay risk off, just wait for the price action to break those levels. On the NASDAQ 100 triple Qs, we were down 0.65% today, and the triple Qs are sitting right on top of the 20 daily moving average of support right around 317. And if we break down from here, we're likely coming back down towards the breakout zone of 311 or 312. Remember, the triple Qs have a gap to fill down here at 308 because we filled the gap to the upside at 322. So it would make complete sense if we did go down there and fill that gap to the downside now that we filled the gap to the upside. However, we are in a bull trend and we're sitting right on top of what could be critical support at the 20 daily moving average, and we still have all of the moving averages stacked to the bull side. So if we bounce from here and we break the high at 322, we're likely going towards that double bottom price target at 327 or the August highs that could take us as high into the 330s. Remember, there's no reason guessing on what's going to happen. Let the price action do all the talking. And right now, to get more bullish, we need to break this high at 321. If we break down through support and we continue lower towards the gap fill at 308 and continue lower than that, we're looking for critical support around the support trend line right around 307. So again, the price action is telling us to be cautious in the short term, but we can't get overly bearish until we see support failing. On the Dow Jones, we were down 0.82% today, and the Dow Jones is sitting right on top of the rising 50 EMA, which is a critical support zone between 332 and 334. A breakdown from here means we're going down to fill the gap at 329, and a bounce from here could still be a higher low in a bull trend, but we need to break that previous high at 341, and then we'll be looking for resistance at 343 and 346. On the Russell 2000 IWM ETF, we were up 0.37% today, and intraday we were much higher at the gap close at 175, and we also got rejected from the negatively sloping 20 daily moving average, and we are still in the bear trend. Now keep in mind the small caps are the ones getting obliterated by the regional bank failures, and we do have this giant head and shoulders pattern if we break the neckline at 170. So 170 is one of those bounce or die critical support levels, because if we break it, we're likely going much lower. Below 170, we easily go to 164, and because of the head and shoulders, we can go even lower than that. You're not getting bullish until we break this resistance zone at 177 and the gap fill at 181. On the ARKK ETF, we were down 0.4% today, coming down into the support at 34.6, but because we have the double triple top, we are still looking for the gap fill below 32 as long as we're trading below 37, and we're not getting bullish until we break above 40.5. On the VIX, we are up 3.04% today as the VIX is back above 18, but we're not looking for the bear market to return unless the VIX can spike out above 20. And the only thing that's going to tell us that is the price action. Wait for the VIX to break above 20, and then you can instantly start expecting the bear market to return. On Bitcoin, we're currently up 1.5%, and Bitcoin is bouncing off of the support at the rising 50 EMA, and we're getting very close to testing the breakout at 29,500. Keep in mind, any rejection below this level is still lower highs, and we could break down into a lower low that could take us down to 25,000. But you need to instantly get bullish if we break 29,500, because that will be a higher low into a higher high, and that could take us to our price target at 31,800. On Google stock, we were up 0.09%, and Google is closing down below the support at 106, and we still have the outstanding upside price target just below 110. Manage your risk down here between 102 and 104, or the support between 100 and 101. So manage your risk in this support zone, but if this support level fails, we will be looking for a retest of the breakout between 95 to 96. On Amazon stock, we were up 0.02% today, and intraday we were trying to break out, getting very close to that negatively sloping 200 daily moving average. But as you can tell, we are now 3 days below the support trend line and getting rejected from that level as resistance. You can stay bullish in Amazon above 102, but if we break below 102, you need to get risk off because we're likely coming back down towards 94 to 90. On Microsoft stock, we were down 0.33% today, and we're very close to fully closing that gap at 310. But as I've said before, this is a time for Microsoft to start cooling down because it's due for a correction. We either close that gap at 310 or we're going to start rolling over immediately, and I am expecting to see Microsoft coming back down towards 290 to 293. On Nvidia stock, we were down 1.45% today, and as you can tell, Nvidia did break out of this trading range to the upside above 280, but it is starting to look like a false breakout move because we were way outside the upper Bollinger Band, and this is exactly what we just saw on Amazon stock. So I would not be bullish on Nvidia while it's below 280 because this was likely just an exhaustion to the upside to squeeze out the shorts before we go through a correction. The correction in Nvidia should take us back down towards 262, and if we lose that support, we're looking for 242. In any scenario, if we start breaking back above 280, we still do have outstanding upside price targets at 298. On Tesla stock, we were up 0.19% today, and Tesla has a very bearish candle getting rejected below that resistance at 167 and closing back down below all of the moving averages yet again. This is very bearish price action, just waiting for support to fail at 160, and then we're likely going down for the gap fill at 146. You can manage your risk at 154 if you're more bullish, but on a break below that, we will be looking for lower prices. The only way I would get bullish at this point is if we get a clean breakout above the resistance at 167, and then you'll be looking for price targets at 173 and the gap fill above 177. On Apple stock, we were down 0.65% today, getting very close to that price target at 171, but we are getting rejected before that gap filled, and we're back down below support at 168, and we have earnings tomorrow after the bell, so there's just no reason to be taking on risk in this stock right now. When we're that close to price targets, there's very little reward for a lot of risk, so I would sit back and wait until after earnings before trading this stock. If you're tempted to short it, manage your risk at 171 because if we break that zone, we're going to 174 and then 177. And if you're bullish, manage your risk at 168, which we're already below, and then the support level at 163. On the financials, we were down 1.14% today with a clear rejection from a lower high into a lower low, so we will be looking for the gap fills below at 31.5 and 31. On the industrials, we were down 0.38% with a rejection from another lower high, and we are back down below all the moving averages, but we are still above the rising 200 daily moving average. This is starting to look like a triangle, so wait for the consolidation of the breakout, and then you can trade outside the range. On the healthcare sector, we were down 0.13% today, getting rejected around that resistance at 134 and starting to build a wedge within the zone between 130 and 134, so wait for the breakout and then trade the breakout. On the energy sector, we were down 1.89% today, getting way outside that lower Bollinger Band, so I do think we're due for a dead cat bounce that could take us all the way back up to the gap fill at 83.78. So jumping back over to the S&P 500, without a doubt, FOMC was a disaster and the Fed is just not giving us any confidence that they know what they're doing, and we're still seeing banking issues popping up. When you get in an uncertain market like this, it's more important than ever to follow what the chart is telling you, because if you start to have any bias and you start to assume the market owes you lower prices and we start to bounce off support and you ignore the chart, you are going to continue to end up into the same position that we've been in most of this year, where bears continue to short a bull trend. Wait for the bull trend to roll over and die, and while that day may be right around the corner, we have no confirmation yet in the price action. It's okay to just sit in cash and wait for more clarity. It is not okay to guess and have a bias and ignore the chart. Right now, the chart is looking more and more bearish with this rejection from resistance, but we need the confirmation of the break of support. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.